Okay, let's try this again. What's happening, everybody? We're having a little technical difficulties. Um, we wanted to come on, wish you guys all a very, very happy new year. 2021 was an amazing year in real estate, as everybody knows. But what I want to do is I am going to invite Gina Cristodero in. And hey, Regina,
Hi, how are
how are
you?
you?
I'm great. Happy New Year. How are you?
Yeah, happy New Year. I'm doing very well. Um, so I wanted to invite you on. I know there's been a recent shift in interest rates right in the beginning of the year where buyers are like, all right, the holidays are over, we're ready to go. And all of a sudden, the feds raise the rates. Um, we had an amazing year last year. Sellers are getting top dollar, over asking. Things are just completely still crazy out there. Um, so for sellers, you should still be listening because this it's not going to affect the market that much, but I think it's going to decrease the buyer pool for some sellers that are out there with this recent rate increase. So tell us what's going on. First of all, introduce yourself.
Yeah. So, hello everyone. I am Regina Cristodero. I'm a senior loan officer at Round Point Mortgage in Melville, New York. Been a loan officer for about 26 years. So, thank you for having me. Happy New Year.
Yeah, yeah,
Uh,
yeah, it's great.
Go on to what you were saying. So, yeah, we started off the new year with a little bit of a bang. Um, Interest rates have been creeping. I mean, historically, they're still amazing, but they're not as low as they were a few months ago, and especially last year. So I would say, for our buyers who have pre-approvals, within the last 90 days, it's really important for them to reach out to their loan officer or reach out to me, make sure that they get an updated pre-approval because with the spike in the interest rates, it's going to affect probably what they were approved at. So
Okay,
just for an example, if a buyer was approved up to a $400,000, let's say mortgage at, let's just say even 3.25%, chances are that rate now might be about 3.75%. So a 0.5% difference is going to change somebody about, I'd say about $90 to $100 a month. Um,
okay,
so that can affect purchase power by roughly twenty to $25,000. So it's important
okay.
to speak with their. It's important for them to speak with their bank and get that pre-approval updated.
Okay. So an extra $100 a month, that's for some people, that means the difference of whether they're going to buy or not.
Yeah.
For some other people, it may not affect them so much, but then talk about what are some of the programs that are available for those people that are right on the edge.
Mm-hmm.
Maybe they're, can't afford or can afford that extra $100. What are some of the programs out there for people?
So still, there's a lot of great programs. I mean, one program in particular is the first-time home buyer program. I help a lot of first-time home buyers, and that's a great market because the rents on Long Island and New York are so high that a lot of the first-time home buyers are seeing that it's cheaper for them to purchase a home rather than rent a two-bedroom apartment. So for the first-time home buyers, those rates for the one particular program offered through the state of New York, that program is currently for a 30 rate at 2.875% for a 30-year fix as of today.
Wow,
Yeah, so
2.875.
that
Now, yeah, that's like that's almost free money,
yeah, exactly.
right?
Mhm.
Right? I mean, even 375 is free money, kind of. I mean,
Yeah,
interest rates were a lot higher a few years ago,
yes.
so interest rates aren't that bad, I think, all in all. But so, what does somebody have to do to get into that program?
So I'm sorry. So for that first time home buyer program, you can't own a home in the last 3 years. That's when you're considered a first time home buyer. Okay. So if you owned a home 4 or 5 years ago and you sold and you've been renting for a couple of years, you are still considered a first time home buyer. There's some income limits. So if you're a 1 to 2 person household, your income cannot exceed $124,000. And if you're a 3+ person household, your income can't exceed 145,000 and change. So
Okay.
it's pretty flexible. That program also does offer a 3% down payment assistance. So the minimum down payment on that program is only 3. And you can also get 3% assistance to use towards your down payment and your closing costs.
Okay.
Okay.
So,
Interest rate does creep up a little bit quarter,
excuse me.
take the assistance, but it's it's a great tool to help somebody be able to have enough of money to make that purchase.
Okay. So give us an example, and not to make you do any math or anything, but say on a $450,000 house, which, is low average around here in Suffolk County. I go for this loan.
Mm-hmm.
What is the assistance? How much of the assistance is going to compensate for my down payment?
So on a $450,000 home, right, the minimum down payment is a 3%, which would be $13,500. So
Okay.
they can get that 3%. You can go 3%, but it caps at 15,000. Okay, so
Okay.
3% of the
Oh.
person, or it caps at 15,000.
Oh, okay. So essentially, a first-time home buyer, as long as they have good credit and their incomes qualify, they could basically go into a house with no money down, going through this program.
Yes, absolutely. They still do need money for closing costs.
Okay.
However, right, they do allow a seller's concession if we're able to work that into their deal. And there are some additional grants, outside grants that they, if they qualify, sometimes a long-term housing partnership or CDC, sometimes they can qualify for additional grants as well.
Okay.
Yeah.
Okay. And what do you think how do you feel the rates are going to be going into the rest of the years? I mean, nobody can really tell, but are they expected to increase anymore?
We're expected to see some increase throughout the rest of the year, but there's so much, there's so many factors that could change things, especially with, COVID has such a big play in everything.
Right.
But they are anticipating, for rates to continue to rise a little bit.
Right. Okay.
I know rise, to a place where people aren't going to be able to buy. They're just not going to be as low as they were last year. But
Right.
3.5%, 4% historically is still an amazing rate.
Yeah, it's definitely still an amazing rate. So from a seller standpoint, with the rates that have already jumped a little bit, if you have a $500,000 or $600,000 house, you're still going to be able to get what you're asking, but I think listing earlier than later, you're grabbing onto a larger buyer pool than, say, at the end of the year. Oh, I'm going to wait a little while because I want my home value to increase even more. Now all of a sudden the rates went up and your home value, something has to adjust in the home value, right? Potentially. Yeah. So it may not be the actual number, say a $600,000 house. There's a lot of $600,000 buyers out there, but I think it's going to knock some people out of the picture.
Yeah, I agree. I definitely think that when the rates start to increase even a little bit more, it's going to, it's going to bump that person. Let's say they were capped at 550 or 575. They're not going to be able to get that extra 25, $30,000, $40,000 difference. They're going to be limited. So you're probably going to have a smaller pool of buyers.
Yeah.
For that. So the sooner somebody lists their property,
yeah.
Because if the interest rates stay a little steady, you'll have more people buying. So I think
Yeah, absolutely. I
is,
think a lot of people have that. They're in that mindset of, oh, well, I'm going to wait till the spring when my house looks nice. And
yeah,
it's like, don't
don't,
wait, because
don't wait.
people,
People
people are
don't care.
buying,
Don't wait.
I think I looked on the MLS this morning. There's like 38 homes in Smithtown available. Like,
Yeah.
yeah, it's insane
Yeah.
still,
Yeah.
the lack of inventory. It's out there, and I've been showing some buyers some condos out in Mount Sinai and Miller Place, and we've put in 4 or 5 offers, and we've gotten beat. So even the condo market is still like very, very strong right now. Yeah,
Yeah. There's just not enough inventory. We need these sellers to get their houses on the market. Act now, do it, because
yeah,
we
yeah,
have people who want places to go. These first time home buyers, which fuel everything up, they need to get in. They can't keep paying $3,000 a month for a 2 bedroom apartment.
yep,
Just so.
yeah. $3,000 on a 2 bedroom apartment compared to $2,500 on a $500,000 house. You know,
Difference.
yeah, it's a big difference in their pocket every month.
Yeah. Okay.
Yeah,
It's
awesome.
definitely better to be a homeowner, right?
Yep. Oh
Um,
yeah, 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 definitely.
all around for so many reasons, for the community, for the economy. It's just more homeowners, the better.
Yeah,
Now
definitely. We just need some inventory. That's
people
all.
their homes for sale. Yes,
Yeah, I may stick a sign in the ground.
you should.
But then you know what? Then I'll be looking for a rental. So, um,
You'll have
Regina,
all that money. Don't worry. You'll have all that money
right, right.
from the sale to be able to do it.
Regina, how can people get a hold of you?
They can either reach me on my office line, which is 631-471-4880. My cell, you can call me there or text me at 631-926-3293. Those are the best ways.
Okay, great. If
Thank
anybody needs any loan advice or needs to get qualified, please reach out to Regina. And we'll do this next week. Maybe we'll try to make it a weekly or at least a bi-weekly little episode, talk about where rates are and what's going on in the market.
Sounds good to me. Thanks for having me.
Okay, thank you.
Take
Bye.
care.